All right. So today's coaching call is going to be really quick. I've had a lot of members that email the support desk yesterday, today. I guess a lot of members are on holidays and taking some time down with their families, which is what you should be doing. So I'm just going to go over this coaching call really quickly, and then I'll put it up in the members area for those of you that want to watch it on your own time. Today, what I wanted to kind of go over is there's been a lot of market chop. We're in a counter uh, bull market rally in a bear market. So there's a lot of chop going on. There's a lot of up and down and a lot of sideways action. And I'm getting a lot of support tickets when members are like, what do I do in this market? Like, as soon as I take a position, it reverses against me. As soon as I go long, it goes short. As soon as I go short, it goes long. Like, they need some help. So one of the things you need to do is you don't need to panic. What you need to do is ultimately you need to map out support and resistance. So this is going to be a quick, sharp lesson, concise, when it comes to support and resistance. So what I'm going to be doing over here is I'm going to be going over a product, which is Apple. And I'm going to show you basically what to do here. So I come over here to what's called the price level tool. You, depending on what your chart package is, you can do this with pretty much anything. So it doesn't really matter. If you need to find it, you come over here to where it says drawings, click on drawings, come down to drawing tools, and you'll see it right there if you're on Thinkorswim, right? I just have it up here already for me, so it's ready to go. So with support and resistance, it just literally sounds what it says. It's you're looking for cluster points, you're looking for areas where you see top formations, which are resistance, and you're looking for bottom formations, which is support. That's the easiest, simplest, quickest way I can explain it to you. And I've gone over this a couple of different times, but I'm going to be really concise about this. It doesn't matter what product you're doing. The laws and the fundamentals of support and resistance apply to every single product, whether it be equities, whether it be futures, whether it be securities, whether it be stocks, whether it be index funds, doesn't matter. So I look for different levels. So over here, I look for, here's a level right here, which is the high. So I click on the high right there. I look on, the easiest way is look for the high and the low first. So you click on the low right there. That'll give you the low, and you can always adjust it. If you want to adjust it on Thinkorswim, you just right click and you go to edit properties right up here, and then you just adjust the price, right? I don't need to do that right now. So now I want to look for other levels. So I'm on a 9-month, 1 day, because this gives me a little bit more of an intraday, long-term, where price action and price volatility will most likely happen. So I'm looking for, these are called gravity points, where a stock tends to levitate towards. So if it's on resistance, the stock will tend to levitate towards these points. If it's on support, the stock will tend to levitate and bounce off of support levels. And whatever support is taken over, then that's the new resistance. So i.e., if we come over here, I'm looking for cluster points where there's a couple different candles that literally bounced off of level. We'd have one right here. And if I'm looking for another cluster point, I would be looking right around. Now, this is just a rough estimate. There's a couple other ways that you can do this. You can do this with Fibonacci extensions as well. So I come down here and look for some more cluster points in the last 9 months. And I say a level is right here. And then I come over here to this level right here where I'm looking for a lot of resistance, which is right there. And then I come over here. I'd look for another level, which is right around here, which is ideally where I've got mapped out right now, 166. That's going to be a resistance and a support level, because you can see it right here. Once this candle broke right here, it failed, right? Then it bounced, came up through, ripped through it. So this is now support at 166.20, right? And then it hit the high 182.94. It tapped it once, almost twice, 3-4 times. That was resistance, and it failed, right? Did it come back to test 166.02? A couple times. It came close here, hit it here, broke through it, tapped it right back here, came through it, tapped it again right here, over here, here, and here. You see the times that 166 is a support level for Apple and a resistance level. And there, tapped it, broke through it, tapped it again, tapped here. So 166.20. So if you're looking, now I could draw some more. So I could do right here as well, 157.53. So this is over the last 9 months. So you can see right here exactly what's going on. So if I wanted to, so let me come over here to annotate. Let me come over here to my tool. So right here, if I wanted to now, I look at this area at 166.20. And I see the areas of support and resistance right here. So all of these levels right here, I look at that and I say, where's Apple right now? Well, here's the level right here where Apple may or may not get to, right? So we look at this as the 160, as we look at this as the 166.20, and we look at Apple right here on this day, on the 29th, we say to ourselves, now Apple is in a little bit of a bull run. So I can look at this as, will Apple hit 166.20 again? It may or may not. But if it doesn't, where's it going to bounce back down to if it all of a sudden decides to reverse? Well, it's going to reverse back down to here, 157.53. And as you see here, up here, I got some stuff going on in the markets, but don't mind. Those are all my alerts that are going on over the weekend. I set up alerts for everything, so I kind of know what's going on here and there. So this is support and resistance. Now, what support and resistance kind of doesn't give you is when you're doing the volatility mapping, is support and resistance sometimes doesn't give you the volatility. So with the volatility, you want to see, like price candles lie all the time, but volatility does not, and volume, right? So that's why I have volume down here. You can see I have all my volume down here. I can see what's going on with the amount of shares, what happened, when it happened. And I'm able to see, okay, right? On this particular candle right here, there's 182 million shares of volume that traded that particular day. Right? And where did the stock go? Nowhere. Kind of open up and close at the same position, right? So what we want to do is we want to introduce what's called the channel tool. So let's come over here. And this channel tool basically helps you map out volatility as well. So what you can do here is, I like to look at this as lower highs. So you want to click from lower highs and you wanted to click on a trend. So when I click this, my mouse right here, I'm just traveling. I'm just going up the path of where I see the candles, because these are lower highs and Apple's making lower highs in this particular trend. So I click on that, then I click again, and this will help me design the trend. And this is a very tight trend. So what this tells me is, as I'm looking at it, This is an algorithmic trend because as you can see here, there's very little slippage. You can see here it went all the way up. So this is not, let me clear this. Let me clear the annotation here. Let me clear all that, clear all drawings to make it a little bit easier for you. So what happens is when you're looking at this, you can clearly see this is algorithm, right? This isn't humans buying, this is algorithm, because this is what I call a staircase up type of a movement, right? This is inside of the course. So this is a staircase to the upside type of a movement, right? So when you see that there, you know that that's algorithms that are running the show, right? So let me get off of that there. So that's one channel. Now, when you clearly see Apple is coming down here, what you want to do is you want to click on the channel tool again, and you want to come down and you want to hit the higher lows, and just keep tagging them with your tool all the way until you hit the actual low, which is right here, right? And then you come over here. Now, what you see here is another channel. So what we do here in this particular channel is let me remove this now. Let me remove that drawing. So here's a new channel that just developed. So you can see the bull run that Apple had right here. So here's Apple's bull. Oops. So here's Apple's bull run. So let me get my tool over here. So here's Apple's bull run in a bear market right there. You see that, right? Now, here's the downside channel in the bear market. So you see what's happening there. So your question would be, well, how do I trade that? Well, you trade this by if the channel is inside, if the price action is inside of this channel, you can short up here, right here. You cover right here because this is support. If it breaks through, then you short again right here, and you come back down and you short and you cover right here, sorry, because this is another support channel, right? So all you want to do is you want to keep shorting. If you shorted from here, if you took a short position on Apple and you rode that short all the way down, the second that it broke outside of that channel, which is right here, that's when you should have covered your position. So you could have shorted all the way up to here because you're staying inside of this channel right here. This is algorithm, right? Algorithms are trading this for the most part. Give me a second here. So when you see that, let me clear that for you so that you can see it. So when you see that, when it comes time for you to cover, you would cover right here because it's broke outside of the channel. And what happened? Well, then we had a vicious drop right here, and then it broke out right here again, but you covered right here, so you're okay. Now, once it gets back inside this channel, so here's where you don't even take a trade, or if you're going to do an intraday trade, it would be a short intraday trade where you're trading for literally 3 days. You got a pop right here. You got a spinning top right here. Then you got a big Mariposa candle right here, big green day up, and then you're out because it's hit this now where this was resistance. Now it's support. Where this was support, sorry, it's now resistance. So this big green candle, you know what's going to happen is if Apple fails, it's coming back down. Where is it going to come back down? Well, it's got to come back down in between these first two lines of defense. So it could be this line of defense or it could be this line of defense. So what happens is that's kind of where you need to cover. So if you would have covered and took a short position there, well, now here's your reward, because now your reward is taking a short position right here, and you're still within this channel going short. right? As long as you stay within this channel, as long as the algorithms are trading within that channel, you can see it right here. You can clearly see it. This is a short position all the way down. Where do you want to cover? Well, you want to cover at each different support level because that is going to be your second line of defense. The first line of defense is your actual channel. So as long as the stock stays in the price action and the volatility stay within that channel, you can trade to the short side. Every time it hits a support level, what you want to do is you want to make sure you cover, right? So let's look at this. Let me clear those drawings there for you so that you see what's happening. So you could have had a great short position from this particular time right here. Which is on May the 10th, or sorry, right here, which is on the 5th of May, all the way down to the 20th of May. So that gives you a good almost 2 weeks, 2.5 weeks to take a short position and to be able to make a lot of money on the downside. So here you see the sideways action right here where it's bouncing, but you're shorting right here because it's still staying within the channel. So it comes up, it stays within a channel. Now it breaks. So when it breaks, that's when you say to yourself, okay, let's remove this drawing now. Where's the next new channel? So in the next new channel, you see exactly where it's going to be. So once again, we go from the lows, higher lows, we touch, and there's another new channel, right? So that's another new channel for Apple that breaks out. And you see exactly with using support and resistance, using the channel tool, you can see exactly where you should be getting in, where you should be getting out, where you should be covering, where you should be looking to short. So at the top of this channel right here, that's the first line of defense. This is the second line of defense because that's now resistance and support. And this is the first line, the first channel. So you take a short right here and look at the movement that you would have had right down there, right? That would have been a beautiful short right here for you. Then it bounced up here, but it's still within a channel, but then you have to cover it because you know this is support right here, right? This is resistance, this is support, right? So you know you need to be able to get your positions on and take your positions off. That's your risk, that's your reward. So what would be the next channel? So let's break out of this. So let's remove that. So where's the next channel now where Apple's making a move? Now Apple's starting to make another move again. So where's the movement right here? So we go from lower highs, we're going up, following tag, touch, touch, touch. That's one channel. We move this over. There's your next new channel. So let's have a look at this because this is the next new channel now. Where the new trend starts right here on the reversal for Apple, right? What day was that? That was June the 20th, right? When Apple hit its low. Now look at the side, right? It bounced up inside the channel, up, bounced, going up, top of the channel, bottom of the channel, ripping up. You can clearly see that this is also what we consider a escalator. So this is an escalator type of a pattern, and it's algorithmic as well because this is very methodical. You can see how tight this actual channel is, where the trading range is. So what do you want to do? How would you trade this? Well, very simple. At the bottom, here's the reversal. You staying inside of the channel, right? If you would have took a long position, you would stay inside of this channel. You would stay in this trade until it broke out of this candle right here, because here's going to be your resistance. You know when there's resistance, this is the resistance right here. You know Apple's either going to break through it or Apple's going to fail. Well, what did it do? Apple touched it and it failed. Where is it going to go back down to? Well, here's your support level right here where Apple is going to go, right? That's support, 135.42. And it tagged it twice, right here and right here. Then it proceeded to rip. So as long as you covered, if you went short, there would have been a nice trade for you. Now, could you have stayed in this trade? Yeah, you could have stayed in this trade. But then what would have happened? You would have to cover your position right here, because if you got short, you would have got blown out as Apple kept going up. So you have to be really careful. So you could have either went short there and then took a long position right here, and then you'd been able to ride this trend all the way up. So you could have either did a debit spread, a call debit spread as it's going up. You could have sold some puts right here as the stock is going up. There's a couple of different strategies that you could have used. Myself personally, right here in this particular situation, as I'm looking at this new trend developing, I'm looking at what's going on. It's inside of the channel. So what I'm going to do is I bought calls all the way through this period right here on Apple, right? I got short here because what happened was I saw this candle right here. So you have to look at your candles too as well. You have to know what your candles are, and you have to look at that and have to say to yourself, okay, so what's happening with this candle right here? So this is a hangman candle, and this is kind of a bearish type of a candle. So when I saw this right here, the next 3 days that's when you're sloping down. That's when Apple is doing a little bit of a pullback. So you can clearly see the pullback right here, where Apple's taking the pullback 3 days, but it's still within this channel, right? If it broke outside of that candle, then I have to say to myself, that's support right there. If it breaks that, this is the first line right here. If it breaks outside of that channel and it's on a down and it's on a downward trend, I got to cover. Where do I got to cover? Well, this is going to be my exit right there, which is that support level. And if it doesn't break and it bounces, then I know that I have to be really careful, and I have to go and get a call position or sell a put and watch this go up, right? So when you're looking at this, this helps you do volatility mapping. And what this does is it also tells you exactly the type of volatility inside of Apple, because you can see it right down here. You can see it right down here. Look at the volume. Look at the volume. Look at the volume. Look at the volume. Look at the volume, right? When you're looking at the volume, you're looking at, this is all sell side activity. This is a full day of selling, full day of buying, right? And it's all algorithm, right? Sure, there's some retail trade in there as well, but if you look at the overall defined channel, like I said, this is an escalator type position, not so much a staircase, but an escalator. And that's all algorithm because it's very precise, it's very smooth, right? So you have to watch that and say to yourself, okay, I'm either going to piggyback off of what these algorithms are doing and follow them, or you're not going to get into the trade. So you see right here on this candle on the 7th to 28th, which was July, right? What was going on here? This is momentum building because why? Well, because Apple had earnings. All right, Apple had earnings coming in, right? So you see the candles right here, you see the volume spike, volume coming in, right? And then Apple, boom, right? Gaps up after earnings, boom, Apple makes a move. So if we're looking at taking this trade, well, if you're watching this video back, whenever you're watching this video, we're going to see now. So this is July 29th. We're going to see now, well, where is Apple going to be, right? Apple just gapped up. So what's going to happen now? Is Apple going to fail? If it fails, where's it going? Well, if Apple fails, The support is going to be 157.53. Apple's going to get back. Apple's going to go back down here, right? Or it's going to hit this right here, 157.53, right? Or what will happen is if it bounces off of here, so let's say Apple, so let's say, let me get my drawing tool over here. Right here is support. Two things are going to happen. Right now, Apple's trading right here, and it's inside the channel. So what's going to happen? Apple is either going to open up, it'll trade inside this channel. If it fails, it's got to break this support, the bottom end of this channel right there. So what's the bottom end of that channel? What's the price on that? The bottom end of that channel is support is 157.53, right? So support level, so on the channel, that's the back end, right? So if you want to be able to take a trade on Apple, you don't want to see what Apple is going to do opening up on Monday. If it starts to rip, you know Apple is going to be staying inside of this channel, and it's going to continue its momentum. And the next line is going to be 166.20, which is what I got mapped out pretty much right here, right? So that's on the long side. Apple could trade like this in a range for the next week. So what would be that range? If we see Apple trading in a range, well, we know what that range is going to be. It's going to be 166.20 to 157.53. So if it wants to trade back and forth in this range, well, what you could do is you could do a debit spread, right? If you were still kind of bullish on Apple. If you were bearish on Apple, well, then you'd be wanted doing a put spread, right, on Apple. So either way, you don't want to look at this. So where do you break? Where do you get out, right? Well, because of the channel, if it breaks and it violates this particular channel, the back end of this channel first, it breaks outside of that channel, then you know Apple's going to be going down. And this is your support right there. So you definitely want to be doing a, you could definitely buy some puts, right? Because this is going to break, if it breaks outside this channel, if it trades inside this channel and then breaks to the downside, yeah, you definitely want to buy some puts, right? So it all depends on what Apple's going to do. But what I wanted to show you is the volatility mapping, because volatility mapping is super important. As long as you understand and know how to map out support and resistance and do it precisely, and you know how to do the channel tool, which is what I'm introducing you to today, because the channel tool will show you the volatility, right? Don't necessarily look at the price action, because the price action is random inside of this channel. But the channel is not random, because the channel is showing you the trend, right? So it's showing you where and how to trade inside of that trend. And then with the volatility, it's showing you exactly, well, where does Apple go from day to day, right? You're just looking at inside of the trend. Where is it now? It's on the upper end of the trend, right? Because the trend is going up. In a bear market, we've got a counter bull rally in a bear market. So one or two things are going to happen. And how do we figure out what's going to happen? Well, in conjunction with Apple, we could look at the E-mini, because the E-mini basically is a product that is weighted, so you can look at the entire weight of the marketplace and look at what's going on with the E-mini or the SPY, right? But because Apple's in the top 100, right, it's going to make some movements. So Apple makes some big movements, then the E-mini and the SPY going to make some movements, because they're kind of correlated. Both of them are kind of correlated. So look at this. Look at your channel tool, because your channel tool will tell you volatility. It'll tell you volatility mapping. It'll tell you duration, because this is trend, right? And it'll tell you exactly where your trap doors are to the upside. If it breaks out, it'll tell you your trap doors to your downside, right? So here's your trap door to the upside, where you see your breakout. Here's your trap door to the downside, right? If that opens up, then you see where the market's gonna go down to, right? So this is your first line of defense. This is your second line of defense. So let me map that out. Let me mark that out for you so that you see it. So let me get rid of all these tools here, or sorry, all these drawings. Let me do the text for you. First line of defense. Hope I'm spelling that right. Now I just gotta move this. Let me see, how do I move this? So your first line of defense is right there. And let me just get your second line of defense down here. So let me draw that. Second line of, probably not spelling that right, but whatever. Second line of defense, I'll put that. So I'll put this over here and the second line of defense, right? So let me get my drawing tool out here again. Stamp. All right, so let's put the stamp here. And let's select it. And let me get my pencil. So in this week, we want to look at, so where's the first line of defense? Well, the first line of defense is right here, right? That's the channel. That's the first line of defense. Where's the second line of defense? Well, the second line of defense is right there, that horizontal support line, right? So that's the first line of defense. That's the second line of defense. So you can look and see if Apple goes up, where is it going to be going, right? If it breaks outside of this channel, as long as it stays inside this channel, there's the resistance. It'll move and keep going up. If it breaks outside of that channel, right, that's the first line of defense, is the lower end of the channel. And then this is support right here, second line of defense. If it breaks through that, then we're going back down here and we're going to be testing 147.67. That'll be the test, right? So let me clean that up there so that you see all that there. So that's today's coaching call. That's support and resistance, and using the price action tool and using the channel tool. These two tools, basically every day you use these two tools to map everything out. Map out your trend, do your volatility mapping, look at the duration and the direction of the trades, and then you'll be able to make sure that you get a pinpoint, kind of like a pinpoint methodology to be able to actually get into your trades and get out of your trades. Now, does it work all the time 100%? No, right? Because as we know, things change at the drop of a dime. You know what I mean? Like, news could come out at any time during the day where all of a sudden the Fed says something stupid, and all of a sudden, or there's a breakout in one of Apple's big facilities over in China, and all of a sudden production shut down for 2 weeks. I mean, that could negatively impact the position and the movement of the stock for that day could drop, right? So anything could happen. What tends to happen will happen, right? But in a direction where Apple is going right now, Apple's got two things to do. Apple can either stop right here, and it can either, let me break out my tool here for you. Apple could do one of three things. From this particular point, Apple could trade sideways in a box and in a range. What's the range? 162, 162.20, 157.53. It could trade inside of that range. Now, because this is the bottom end of the channel, what you'd have to do is from day to day adjust that channel. So I'd have to adjust these, I'd have to adjust this channel and make a new channel. But if it stays and it goes inside of that box in that range, then that's what Apple's going to do. What's the next thing Apple could do? Well, Apple now could either do a staircase. Here's resistance, right? Breaks through that resistance. Where's the next gravity point? Where's the next gravity point where Apple could possibly go? Well, let's get out the horizontal price tool. If Apple does break out, where's the next cluster points? We look for the next cluster points where Apple could possibly be. And where would that be? Well, let's see here. So let me get out my pricing tool. Your next cluster points or your next gravity point with Apple would be right there, 175.57, because you can clearly see what Apple has done, right? Here, 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 4 times. That was resistance, broke through, right? That was the top of resistance right there. You can see it right there. That was the top of resistance. That was resistance again right here. That was resistance right here. That was resistance on a bull run, 4-day bull run, and right here, 175.57, right? That's resistance and support. So if Apple continues to move up, this is the next cluster point or the next gravity point it should go to, right? 175.57. So we'll wait and we'll see for what happens to see what Apple actually does. Now, can we do this with another tool? Absolutely. So let's clear all this drawing set here. So you see, I like to keep my charts super clean. Now, if you're asking me, why am I going to the 9-month 1 day? Because that's more of a smoothing factor. There's less chop, you get more clarity. Now, I could come over here and go down to the last 6 months as well, right? So I can do a 6-month 1 day, and I can get more condensed inside of the intraday trading to get less of a smoothing factor, but more volatility. And it would be the same thing. I could come over here now and I could use my Fibonacci retracements. So I could go from a reactionary high down here to a reactionary low. And it's pretty much the same thing, right? So using the Fibonacci tool, here are my levels. See, 173.28, 167.44, 160.08. So look at this. So I just used the channel tool and the price action tool to map out my levels. Look at what happens here, right? Remember this, 166, where are we here? 167.44, right? 160.08, 154.14. If you look at these levels I mapped out with the price tool, it's almost bang on, right? Plus or minus, literally plus or minus $2, plus or minus $1, these levels, plus or minus $2. Remember what I said, 175, whatever, was using the price action tool. Well, here it is, Fibonacci 173, right? So pretty much spot on, bang on. If you want to be able to look at where Apple could head, right, or where it could go, right? Now we use the Fibonacci tool. You can see These are gravity points. Once again, it's broke that gravity point right there, which is support, right? Now it's above that gravity point. Where is it going to go? Well, the next level could be 167, 60, 167, 44. And I have it mapped out at 166, right? Because there's a level that I'm eyeballing, right? So you see how effective that is. Now, this is short. This is a medium to long-term tool using the Fibonacci retracements. Can you use the intraday Fibonacci? Yes, you can use Fibonacci intraday. If you're going to use Fibonacci intraday, you want to be using it on the 5-minute. You want to scrub the 5-minute through the 15-minute. Then you want to scrub the 15-minute through the 1 hour. Then you want to scrub the 1 hour through the daily. So that's how you would use the Fibonacci tool. So you want to be looking at a couple different time frames to make sure you have a good understanding of volatility mapping and price action with an intraday take using the Fibonacci tool, right? So keep that in mind. That's what you want to do. Now, you guys know that I used the rectangle tool too, because the rectangle tool will give me the volatility, right? So let's remove the Fibonacci. So you see, this is how we do Apple. Can you do this with any other stock? Absolutely. You can do it with all sorts of stocks. You can do it with all sorts of equities, all sorts of securities, options, futures, crypto. It's all the same methodology. It's all the same formulaic process, right? You just have to understand and know how to map out support and resistance, how to do volatility mapping, and making sure that you understand where your trap doors are to the upside, where your trap doors are to the downside, where your positions are to get in, where your positions are to get out. So with that being said, thank you for showing up to this coaching call. It was very precise. I wanted to keep it short because a lot of people are on holidays, but I wanted to get this out to you so that you guys can see it. So with that being said, I'll see you in next week of trading. Take care, everybody.